Welcome to the Deep Dive, where we take your questions, your sources, and together we really try to get to the heart of what's going on. Today, we're jumping into a topic that's, well, it's been making a lot of headlines, especially if you're keeping an eye on real estate. We're talking about the Austin housing market. There's this common story, this narrative floating around, but the sources you've given us paint a really different picture. It's pretty fascinating, actually. For this deep dive, you've handed us some great stuff, a detailed summary of recent Austin housing data from July 3rd, 2025, compared right against July 4th, 2024. And we also have this insightful article from teamprice.com, new construction versus resale. What's fueling Austin's market correction? So our mission today is pretty clear. We're going to unpack these numbers, dig into the article, and figure out what's really driving the market correction in Austin. Is that popular story about new construction actually holding up, or is something else going on? Okay, let's dive in. So you've probably heard the buzz, right? Lots of headlines, lots of chatter saying new construction is basically to blame for Austin's housing market cooling off. The story usually goes, builders are just flooding the market, way too much supply, and that's pushing prices down. But when we actually look at the numbers you sent over, well, this is where it gets really interesting.
Yeah, it really does. What's fascinating and what the data is telling us pretty clearly is that story isn't quite right. The correction we're seeing, based on these numbers from July 3rd, 2025, it's really being driven more by resale inventory, not this supposed flood of new builds.
Resale inventory.
Exactly. Let's look at active listings first. That's kind of our starting point.
Yeah.
It tells us what's for sale right now. As of July 3rd, 2025, there were 4,121 active new construction listings. Now, the key thing here isn't just the number itself, but how it compares to last year. It's actually down slightly, down 1.03% from July 4th, 2024, when there were 4,164.
Down. Okay, so fewer new homes listed now than a year ago.
Right. Just a touch fewer. But look at resale. That's where the big change is. There are now 13,558 active resale listings. That's up, wait for it, 23.05% from the 11,018 resale homes listed a year ago.
Wow, 23%. That's a huge jump compared to new construction actually dipping a bit.
It's a massive difference. And it tells a story, right? Builders seem to be tapping the brakes slightly, maybe adjusting to the market.
Yeah.
But existing homeowners, a lot more of them are putting their houses up for sale compared to last year.
So what's the main takeaway from just these active listing numbers? It feels pretty clear. The surge in homes for sale in Austin, it's coming from the resale side, not the new construction side. The common story seems, well, off.
Exactly. The narrative focuses on builders, but the inventory boom is really in existing homes.
Okay, so that's what's available. But what about what's actually moving? Pending contracts should give us some insight there, right? They show buyer activity.
Precisely. Pending contracts are homes under contract, so they reflect current buyer demand, people actually signing on the dotted line. And if we look at new construction pending sales, they have declined. They're down 13.47% year over year. Fell from 1,834 last July to 1,587 this July.
Okay, so fewer people signing contracts for new builds. That suggests demand is softening there.
It does show a cooling, absolutely. But compare that to resale pending sales. They're almost flat, down just 0.60%, basically unchanged year over year.
Huh. So even though there are way more resale homes listed, the number going under contract each month is holding steady.
Pretty much, which suggests that while the overall market is slower, the demand that is there is still absorbing resale homes at a relatively consistent rate, even if it takes longer because there's more choice. And that decline in pending new construction, it reflects that broader softening of buyer demand, yes, but it also shows builders are likely adjusting. They see fewer contracts, they react. Maybe they offer incentives, maybe they slow down releasing new lots. They're not just building blindly into a slowing market.
Right. They have more direct control over their immediate supply compared to thousands of individual homeowners deciding to sell.
Okay, then there's this activity index you mentioned in the data. You said it measures demand relative to inventory. How does that play out? Yeah, the activity index is super useful. It basically tells you how fast homes are going under contract relative to how many are available. Think of it like an absorption rate. And here's the interesting part. New construction, even with its dip in pending sales, still outperforms resale in absorption. Its current activity index is 27.80%. Now, that is down from 30.58% a year ago, so about a 9% decline in activity relative to supply.
Okay, 27.80%. So roughly 28 out of every 100 listed new homes go under contract each month. How does resale compare?
Resale's activity index is lower and fell more sharply. It dropped from 19.52% last year down to 16.38% this year. That's a 16% drop.
16%. Wow. So only about 16 out of every 100 resale homes are going under contract each month, compared to almost 28 for new builds.
Exactly. So even though overall activity is down everywhere, new homes are still being absorbed proportionally much faster than resale homes.
That really kind of puts a nail in the coffin of the new construction is flooding the market argument, doesn't it?
It certainly challenges it very strongly. If new construction were the sole problem, you'd expect its activity index to be plummeting much faster or be much lower than resales. But the opposite is true.
Demand for new homes, while definitely cooler than peak times, seems relatively stronger compared to the demand for the now much larger pool of resale homes.
That's what the numbers are showing us, yes.
Okay, yeah. Okay, so let's unpack the why. What are the dynamics behind this? Why are we seeing resale inventory surge while new construction holds relatively steadier in terms of absorption?
Well, it reflects some pretty classic market correction dynamics, especially in a place like Austin that saw such rapid growth. First, affordability is a big factor. When mortgage rates go up, like they have, and maybe the economy feels a bit uncertain, buyer demand just naturally cools off. People can afford less house, or they hesitate. Builders, as we've sort of touched on, tend to react pretty quickly. They have shareholders, they track metrics daily, they adjust production, they start offering incentives like rate buydowns or paying closing costs to keep things moving.
Their business is trying to manage inventory flow. Makes sense.
Right. Resale inventory, though, builds up for different reasons, often less coordinated. You have homeowners listing because of life changes, job moves, family size changes, retirement. That happens regardless of the market. But then you add in people maybe feeling financial pressure, or maybe thinking, I should sell now before prices drop more. And crucially, in a slower market with higher rates, homes just naturally sit longer. Buyers are pickier. Financing is harder. So listings accumulate.
So it's a mix of life stuff, market timing attempts, and just slower sales, meaning more homes pile up.
Exactly. And there's another layer. Why might buyers still prefer new construction even now? Often it's those builder incentives we mentioned. A 2-1 buy-down on a mortgage rate can make a huge difference in monthly payments, something a typical resale seller can't easily offer. Plus, you get warranties. Everything's new, no immediate repairs needed.
Yeah, compared to maybe an older resale home that needs a new roof or HVAC soon, that's a big extra cost, especially when budgets are tight.
Precisely. Buyers might see a new build, even if the sticker price is a bit higher, as less risky, or having a lower initial cost of ownership when you factor in potential repairs on an older home and those juicy incentives.
So putting it all together, Austin's market is definitely correcting, prices are adjusting, but pinning it all on builders seems, well, wrong.
Yeah, I think inaccurate is fair. The correction seems shaped much more by, softer buyer demand overall due to affordability, combined with this really significant jump in the number of resale homes hitting the market. Understanding that interplay is key if you're trying to make sense of what's happening.
Absolutely. Okay, this is super clear now, much clearer than the headlines, but let's make it practical. What does this mean for you, the listener, if you're actually in the Austin market now, buying or selling?
Okay, good question. For buyers, look, you clearly have more options now than you did a year or two ago, especially in resale. That 23% jump in resale listings means more choice, potentially less competition per house, and likely more room to negotiate.
More bargaining power on the resale side.
Definitely. But don't automatically write off new construction. Those builder incentives can be really valuable, sometimes offsetting higher interest rates significantly. You need to compare apples to apples. Look at the final monthly payment, factor in potential repair costs on resale versus the warranties on new. Do the math for your own situation.
So buyers have options, but need to look closely at both new and resale deals. What about sellers? Especially resale sellers.
For sellers, particularly with resale homes, the message is pretty clear. You need to be realistic. Price competitively right from the start. That huge increase in resale inventory is your direct competition. The days of listing high and expecting multiple offers over ask within hours, those are gone for now.
Yeah, feels like a different world.
It is. Be prepared for your home to be on the market longer. Presentation matters more than ever. Good staging, great photos. And maybe think about offering concessions like help with buyer closing costs to compete with what builders might be offering. It's about adapting to the current reality.
It really underscores the need to rely on the actual data, not just the general mood or the easy headlines, doesn't it? Makes a real difference in strategy.
Absolutely. The data gives you the real picture, which is crucial for making smart moves.
Well, this has been quite the deep dive. We started with this common story about new construction driving Austin's correction, but the data really led us down a different path. It seems much more about this complex mix of buyer demand softening due to affordability and this really significant rise in resale listings changing the whole inventory picture.
It really does. And, thinking about this raises a bigger question, perhaps. When we see how differently new construction and resale markets react in a downturn like this, what does that tell us about how cities, especially fast-growing ones like Austin, should think about housing supply long-term? Is the answer always just build more, faster? Or do we also need to better understand the factors that influence when and why existing homeowners decide to sell or not sell? How much does the flow or lack of flow from existing housing stock impact the market dynamics alongside new supply?
That's definitely something to chew on. Is it just about building or also about the churn within what's already built? Food for thought as you navigate the world of real estate. Thank you for joining us on this deep dive into the Austin housing market. We really hope this gave you a clearer, data-driven view of what's actually happening.